Hey there, Carlos Vargas from Vargas Insurance and from FirstTimeHomeBuyerTools.com. My guest today is Patrick Queally. Patrick, I'd like to thank you for coming on our show and maybe giving us a few minutes of your time.
Well, it's a pleasure to be here. I thank you for the opportunity.
Great. Thank you. Hey, tell us a little bit about yourself.
Well, I've been in the mortgage industry just over 20 years now, believe it or not. I started off in the business from the back office. I started off processing and underwriting, and after close to 9 years in the back office, I made the move to become a loan originator, working directly with consumers, helping them to structure the best mortgage financing for their financial condition.
And what made you jump from the back office to the front office, to being in front of the consumers?
Well, at first, quite honestly, it looked like a whole lot of fun. The loan officers I was working for at the time as a processor seemed to be spending a lot of time having fun on the golf course and networking with clients. That certainly seems like fun, but there certainly is a lot of more work that goes on behind the scenes as well. But it really is a much more rewarding position, really to meet the people up front, understand where they're coming from, and it's not just numbers on a page or pages in a file. They're real people, and to help them from their desire to own a home, to be sitting at the closing table and see the keys passed over to them, it's a rewarding experience.
That's great. That's great. Tell us a little bit about, if you had three basics, if somebody was looking to purchase a home, what would be the three basic pieces of information that they should take away from this interview today?
Well, I would say probably number one would be start early. Start very, very early. Once you've identified a home, I'm not going to say it's too late, but the best advice that I can give anybody is to meet with a competent mortgage professional well before you think you're ready to pull the trigger and place an offer on a home. Now, the reason for that is I found that in today's marketplace, there are so many credit reports that have errors on them. And a lot of time it can take a considerable amount of time to fix those errors. So you certainly want to be able to have that time to make changes and adjustments so your credit report adequately reflects what your real credit history is and what your real credit score is, because so much of the financing terms that are offered today really depend on what the credit score is. That's one of the big pieces to the puzzle. So that's number one, start early. Number two would be for the consumers, rather than just calling and shopping for what's the best interest rate or what's the lowest closing costs, as a consumer, you really need to interview your loan officer. Okay, so essentially what you're doing is you're hiring somebody to help you with what is probably the largest financial obligation of your life. And you want to make sure that that person is adequately knowledgeable and is competent enough to help you get to the closing table. Because unfortunately, the reality of it, Carlos, is someone quotes you the lowest rate in the world, doesn't help you a bit if they can never close on that loan. You want to make sure that someone is competent, because in today's world of mortgage financing, it's really not a case of if something is going to go wrong or if something pops up in your loan file. It's a matter of when it comes up. And you want to make sure that you have a good professional that's going to help you deal with that and jump through those hurdles to get you to the closing table.
Great advice.
And I suppose the third bit of advice that I'd give is to work by referral. So how do you find that competent loan officer? Ask around. Ask your friends, family members, other people who, other people that you trust their advice. Find out where they obtain their mortgage financing from. That's typically going to be your best source to the right person, right path to the right person.
It's always the best way to get the best professional is to ask your friends and family.
Absolutely, absolutely. Yeah. And we're living, breathing examples of that, Carlos, because that's how we met.
It's exactly, isn't it?
Great,
yeah.
great.
It's a small world. Yeah, we all live by the same.
Yeah.
By the same. Tell me about one of your successes.
One of my successes. Well, one of the proudest transactions I worked on, one of the transactions I'm most proud of working on, was actually not just one transaction, it was a series of transactions. So there was a young lady who unfortunately was going through, or had just completed, a rather nasty divorce. And her husband had left her with 3 young children, and she was working real hard to, try and make ends meet. And she had an opportunity through a friend of a family member to purchase a home at a discount, and she jumped on that chance. Now, she wasn't able to get traditional mortgage financing, but she was able to get a private loan. So basically, someone who was not a bank had lent her money privately, individually. And the terms of that loan really made it difficult. So by the time she came to see me, she went from a difficult position to maybe what I consider even a worse position, because now she had a nice home to raise her family in, but the bills were just a little bit beyond her reach. So in that case, I actually was able to help her and secure traditional mortgage financing. Now, unfortunately, due to the divorce and all of the financial ramifications of that, her credit score had really taken a beating, and she was in a tough position. So the terms we were able to arrange for her really weren't ideal. It was a high interest rate, but it was still lower than what she was paying to the private lender. So I worked with her after we closed that loan for a period of about another 6 months. We were able to repair her credit and get her refinanced into a slightly better type of loan program with a better interest rate, which helped her finances, her monthly budget even further. We worked together for another 6 months after that, and we were able to refinance again. So I believe in all, I think it was a series of 3 transactions, and if memory serves me, we brought her from the initial private lending rate of 12%, and at the end of the day, the last transaction we worked on, her interest rate was under 5%. Now, it took a lot of time, a lot of effort, a lot of hard work on both of our parts.
Paperwork.
But she committed to it and did it, and at the end of the day, the monthly obligation that she was paying ended up being about $2,500 a month less than where she started off with. So, you know, as a success, you take someone that's really struggling and help them before, during, and after each transaction to get them to a better place. And I'm real proud of my client that she was able to pull herself out by the bootstraps and get through a tough situation and not just manage the household, but also be managing, you know, taking care of 3 children as a newly single mom. So that was one of the transactions that I'm most proud of. And if this client happens to stumble across this video, you know who you are, and I'm proud of you. Congratulations.
That's great. That's great. We hear of so many foreclosed properties out there. Is it good advice if you're a first-time home buyer to be looking at buying one of these foreclosed properties?
Well, yes and no. So what often happens, Carlos, with the foreclosed property, the bank has taken that property back because the previous owner was not making the payments. And you know, it could have fallen into default for any number of reasons. But I seem to see out there that quite often when that individual is foreclosed on, you know, it's a difficult situation, and a lot of times they can be angry. And a lot of times they'll take that anger out just physically on the property and tear the property apart on the way out. But also, you know, due to no fault of the previous homeowner, maybe they just fell on hard times financially, couldn't maintain the property, and weren't able to keep up with their mortgage bills or maintain the property. So basically, the bottom line is a lot of foreclosed properties end up in a difficult condition, okay? So when a new buyer comes in to purchase that property, they may be looking at sort of the end of the road. Once they get in there, they can paint that kitchen and repair those cracked, you know, floor tiles and patch up the holes in the wall and the holes in the ceiling and put what's called sweat equity into the home to improve it. And that's a great idea. But the problem is the lender that's giving you the mortgage financing to purchase that property, they want to see that property is in good condition right now at the time of the closing. So a lot of homeowners or potential homeowners will look at foreclosures as a way to get a property for a lower purchase price and put in your sweat equity to improve it and really turn it into a home for your family. And while that's a great idea, in practice that doesn't always quite work out. Some homeowners may be trying to bite off more than they can chew. And that's why most lenders in today's market are going to require that the property essentially be in a move-in condition. Now, if the property is outdated and simply needs, you know, some cosmetic updates, you know, I don't know if you'd want to live in that avocado green, kitchen or bathroom, but cosmetic updates like that are certainly fine.
Sure.
As long as everything that's in the building is functional. The light fixtures and the plumbing fixtures are all in place.
Yeah.
If you can find a foreclosed property that is essentially in move-in ready condition, but maybe just needs some cosmetic updates, well, that's certainly reasonable, and that's a transaction that I would tell most first-time home buyers it certainly warrants taking a look at. But we need to take a close look at your budget too, because it's not just the money to get into the property in terms of down payment and settlement charges. If you want to make some upgrades to the property, you got to make sure you're leaving enough cash in your pocket to be able to do that once you move in. We don't want anyone to be house rich and cash poor and ended up in a situation where they're struggling to make that payment every month.
Somebody else comes along and is buying that foreclosure.
And then, the cycle starts all over again.
Because they've gone through all their money.
Exactly.
What's a realistic down payment? What do most banks and mortgage companies require as a down payment
the
today?
vast majority today is 5%. Most conventional, or really all conventional loan programs require 5%. And here's a unique twist on that. Recently, Fannie Mae and Freddie Mac, the quasi-government bodies that regulate the mortgage industry, have alleviated some of the underwriting requirements. So now that 5% down payment, the vast majority of loan programs allow for that down payment to come to you by way of gift. So if you're a young homeowner, fresh out of college and looking to purchase your own home, and you've got mom and dad or rich uncle, whoever that wants to help you out with the down payment, well, that entire 5% can come to you by way of gift.
Oh, that's great.
So that's
Great advice.
so that's
Yeah,
a conventional
yeah.
loan with 5% down. There certainly are loan programs out there with less than that down. There are FHA loans, Federal Housing Administration, which allow for as little as 3.5% down. Now there are also USDA loan programs, and it has nothing to do with stakes, okay?
USDA.
Exactly, but it is a rural housing program. So the property itself, the location of the property has to qualify in addition to the borrowers needing certain qualifying criteria. But the great thing about a USDA loan program is there is no down payment required. It's 100% financing.
Oh, that's great.
Yeah.
So no down payment.
Exactly. So the other most popular no down payment loan is a VA loan for veterans. So if anybody watching this happens to be an active duty service member or a veteran, it certainly is possible to purchase a home with zero down payment, and that's a huge benefit, and rightly so. Our service personnel deserve that.
Going back to the rural as in Western Mass?
No, believe it or not. So we're sitting right here in Dorchester. I don't think any properties in Dorchester are going to qualify for rural housing, but I do have clients in East Bridgewater, West Bridgewater.
Okay.
Plymouth has a huge area that is USDA approved. Pembroke, Kingston. So most of my business, my clientele, is from Boston proper south, so I'm really more familiar with the rural housing areas south of the city.
Yeah.
But the further you travel down Route 3 south, typically the more options you're going to have for properties that will qualify for rural housing.
Because they're just spaced out.
Exactly,
Yeah.
they're spread out, yeah.
Spread
So
out.
the USDA has defined, not just by zip code, but literally street by street,
Wow.
what property is going to qualify. So I actually had a client a couple of years ago that was looking to purchase a home, and there were actually two homes for sale on the same street. And believe it or not, one of them qualified for USDA financing, and the other did not, on the same street. And that's how specific it is. It's really house by house specific for USDA financing.
Wow, wow. Good to know that. What's the favorite part of your day? What's your favorite?
Well, it may sound corny, but realistically, it's sitting at the closing table with that first-time home buyer, that that young family that you can tell has scraped together and saved and worked hard for that down payment. And after that, huge stack of paperwork, once they sign that final piece of paper, and to see the keys, handed across the table, it may sound corny, but from where I sit, that's really a rewarding, satisfying part of my job. Just the look of just exhilaration and gratefulness and hope for the future, for their family in the new home. It's a really cool thing to be a part of.
And knowing that you establish that family and that community and try to set roots and be part of the fabric of everything that goes on, right?
Exactly.
Because now they're committed because they own it.
Exactly, and it's it's been proven how much more that a homeowner contributes to the community.
Sure.
In terms of the transaction itself, purchasing a home, upgrades that are made to the home, the local hardware stores, to the local landscapers, to tradespeople. It's the stats are out there as to how many thousands of dollars are contributed back into the economy after someone purchases not just a first home, but any home.
The repeat buyers, right?
Absolutely.
Right. How would somebody know if it's time to refinance their home?
Well, Carlos,
other than the interest rate,
well,
interest rates go down. Then,
exactly. So the old rule of thumb is that if current interest rates are a full percentage point below where you are, so for example, Carlos, if you had a mortgage at with an interest rate of 6% and the market rates were 5%, most people would say, okay, now is an appropriate time to take a look at a refinance. But that's really just a rule of thumb.
Okay.
Every transaction has its own complexities, has its own intricate pieces, so it may not necessarily be a percentage, it may be a dollar amount. So I have clients that are willing to refinance if we can reduce their monthly payments by $150. I have other clients that say, well, it's not worth my while unless I can save $300.
Okay.
But then you also have some specific need refinances. I have some clients that have children that are of college age starting out and they need some money for college. So they cash out some of the equity they have in the home to help with some of the college bills. I have some clients that will take a look at their finances in a big picture and say they have a certain amount of credit card debt and they have a certain amount of mortgage debt, refinance to combine the two into one payment that is across the board lower than what they're paying separately. So there's any number of different reasons that a refinance is going to make sense. And if you're looking to refinance simply just to reduce your monthly obligation, reduce your monthly payments, well, that's really more of a personal question. What dollar amount do you feel comfortable with that it's worth your while to go through the process?
Because you've got to watch the number of years as well, right? So if you've been into the home for 5 years, now you're going back to a 30.
Well, exactly.
That has some weight on it as well.
Part of the question becomes not just what it is monthly, but what it is long term. Are you interested in having the loan paid off by a certain date, whether it be your retirement date or the date the kids are going to college, or like you mentioned, you took out a 30-year loan, you've been there 5 years, rates have come down, you want to take advantage of that lower rate, but you don't want to extend it out another 5 years. That's still possible. So you can refinance from a 30-year original note to a 25 or a 20. I have a number of clients that have refinanced to a shorter term, have also reduced the interest rate, and even though the term is shorter, they've still been able to reduce their payment.
Oh.
So they've cut not just dollars off every month, they've cut years off the life of their loan.
That's
certainly
great.
is possible.
Yeah. And just going back to consolidating your debt in with a refinance, because most folks today can't write off that credit card debt, right? So the interest you're paying, so at least when you combine it with your mortgage, you're able to
and there are some limitations there, so we have to be careful. So the IRS allows you to write off the first $100,000 worth of equity, cash out equity, as part of your mortgage debt.
Okay.
So if the cash you're taking out is in excess of $100,000, technically, by the IRS rules, you're not supposed to deduct the mortgage interest on the over $100,000 cash out. It's a very specific, finite, rule in the IRS code, and to be honest with you, I found that most CPAs aren't even aware of that. And in the business for years, there's been rumors that the IRS is going to come back and change the reporting requirements for mortgage interest paid to be able to capture or recapture that interest debt that's being written off that shouldn't be. Yeah. But those rumors have been going around for years. Right. So if anyone from the IRS is watching, I work by the book. Thank you.
Find a CPA if you're looking for advice, by the way, a CPA that knows all about these rules.
Yeah. And again, we're talking about referrals. If you need to talk to a CPA about such items, please reach out to Carlos, reach out to me. Be happy to introduce you to the people that we work with, that we trust.
We sure would. Absolutely. Have plenty of those folks. If there's a bit of wisdom that you've learned since purchasing your first home that you wish you had known when you first purchased your house, what would that have been? If you can share that with us.
I'd say probably, it's the advice that I give clients every day now. It's you don't want to be equity rich and cash poor. So while it certainly makes sense to put as much down as you can to make the payment as low as possible, you want to make sure you hold on to some cash.
Okay.
Because as a homeowner, I can tell you, it's going to go wrong. Things are going to happen.
The emergency fund, right?
Exactly. The boiler's going to break down, the roof is going to leak, the car's going to break down, the dog's going to eat the cat, and though everything's going to go wrong, and it's all going to happen in the same week.
Yeah,
okay.
yeah.
It's pretty much sort of Murphy's law of real estate. It's all going to go wrong all at once. So the advice that I give my clients is sort of a trade-off, a different way to take a look at it. Which would you rather prefer? Would you rather to put more money down and have a monthly payment that's $50 less per month? Or would you rather hold on to that extra $10,000 or $20,000 in the bank as an emergency fund? My argument is an extra $50 a month in payment is going to be easier to find than $10,000 or $15,000 when you need it all at once. So it's a balancing act. It's putting enough down so that the payments are affordable, but also making sure you hold on to enough in reserves that when that emergency comes up, and it will, something's going to go wrong, you want to make sure that you can handle it and not have your entire world be thrown into financial disarray and all of a sudden you're missing payments on your mortgage because you need to fix your car to be able to get to work.
Or the leaky roof that can't get fixed,
Exactly.
and now the mold and everything else from an insurance standpoint. That's an awful situation.
You know all about that. I'm sure you see that.
If you had to give somebody advice, if somebody's looking to buy a home in the next 30, 90 days or a year, what type of advice would you give them? What would be the wisdom again that you would
Start
share with
immediately.
Okay.
Start immediately. So that old saying goes, when's the best time to plant an oak tree? 20 years ago.
Right.
When's the second best time to plant an oak tree? Today.
Yeah.
So even if you're 6 months or a year away from realistically thinking that you're going to purchase a home, I'm going to say start right now. Again, the example of errors on the credit report, as long as you have enough time to identify what those errors are and fix them, by the time you're ready to pull the trigger and purchase a home, you're going to end up with a credit report that is an accurate depiction of what your credit history is. Okay, so that's going to help with the overall terms. So starting way before you think you're ready.
Right.
But not only that, that may help you realize that you are ready now, and it is possible now. You may be mistakenly thinking, oh, I need to save up for a 20% down payment, and it's just not true. So by working with a competent mortgage professional, they can guide you through all of the ins and outs. And I'd say that that sort of dovetails into the next important point, which is ask questions. Again, you're hiring someone to help you take care of what is probably the largest financial obligation you're ever going to undertake.
Yeah.
You want to make sure that that person is knowledgeable and competent and can answer all of your questions in an easy to understand manner. If they're just simply talking jargon and talking circles around you and you just don't understand, it's okay to say, you know what, I don't think we're a good fit.
Right.
If you're not comfortable with the person you're working with, again, we're talking about, in most cases, hundreds of thousands of dollars.
Right.
You want to make sure you're comfortable with the person you're working with.
Yeah. And we're not perfect fits for everybody.
Exactly.
And you have to feel comfortable enough that whoever you're working with,
Exactly. Again, you're hiring them to take care of
Absolutely.
hundreds of thousands of dollars in the transaction. You want to make sure that they're well equipped to deal with whatever issues that may come up. So again, while interest rate and closing costs are really important components of the transaction, what's more important is the competence of the loan officer. You really want to make sure that you interview them. It's not the Spanish Inquisition. You don't need to grill them, but you want to make sure, you want to know how long they've been in the business. On average, how many transactions they work on per month or per quarter, per year. That's important to make sure that, if they're working on, dozens and dozens of transactions every month, how much time are they really going to have for you when you have that panic moment, this question you need to have answered? Are they going to be able to get back to you? So again, closing costs and interest rates are an important component of the transaction, but the lowest rate in the world doesn't do you any good if that can't get you to the closing table.
So true.
You want to make sure you're working with someone that has experience in the business, that's been around the block more than once, and can deal with whatever comes up over the course of a transaction.
And that there's a hurdle or two that always comes up.
Oh, there's,
no matter how.
you know, in any transaction, there are literally thousands of data points that loan officers, processors, loan underwriters, loan closers, you know, take a look at. And, you know, if one I is not dotted, one T not crossed properly, yeah, it really could, you know, cause disaster in your overall transaction. So you want to make sure you're dealing with the competent people that can maneuver through all of that and get you to a closing table with the right terms for your financial condition in an appropriate time frame.
Great advice. And where can somebody find you? Where are you? You must be on social media.
Oh, absolutely. So I do have a website, and it's my name, and I'll probably have to spell it out for everybody. So it's Patrick.
It'll be in the show notes.
You're going to list it? Okay. So
the
website is patrickqueally.com, and the best way to reach me is probably my phone. You know, so my cell phone is with me, and as long as I'm not out playing soccer with the kids or sitting down with another client, happy to take the phone call. So I'm sure you'll display that number on the screen.
Absolutely,
probably someplace right about here.
Yeah, maybe not there. Maybe not there. We'll see. And so Patrick's contact information will be in the show notes, in the video notes. So please check the website. And on just a departing note here,
Sure.
What's your favorite food? What do you like to eat?
Well, Carlos, you may not know this, but I actually worked my way partially through college working as a cook in a restaurant, my uncle's restaurant.
I didn't know that.
So I got to learn my way and know my way around the kitchen pretty well. When I do have some free time, I still like to cook today. One of the favorite dishes I like to prepare myself is chicken francaise.
Chicken francaise.
Yes, and it's a
fancy.
It's not. The secret is it looks fancy, but it's really not that difficult to prepare.
Right.
Now, if I'm out at a restaurant having a dinner, the favorite dish that I like to order is a steak à poivre, which is a steak
nice,
encrusted in pepper, and that with a nice glass of Merlot, you really can't go wrong.
Yeah. That's a done meal,
Yeah,
right?
there you go.
That's a great meal. I want to thank you. I want to thank you for
Carlos.
your time today.
It's really been
Appreciate
great
you
spending
taking
some time with you. And
Same here, yeah.
Thank you so much.
Every time I get together with you, I always learn something, which is great, which is what we hope that you're getting from these first-time homebuyer videos. And look for the podcast of the interview of Patrick and I. And I'd like to thank our friends at Esther Restaurant for putting up with us again here and taking up their beautiful room.
Yeah, beautiful location. This is a great spot, and Carlos's office is right around the corner. So
it's here most of the time.
Go visit him and come around the corner here for a bite to eat afterwards.
Thank you. Thanks again.
All right,
Take
thanks.
care and check for our next video. Bye-bye. What do you think?
Yeah, I think it went well.
Do you think we did